Hey everybody, hope you're having an amazing day. Today is January 8th, 2025. Welcome to Trend, the real estate news drop I'm going to be doing for you weekly here, kind of analyzing what's going on with the properties that are on the market, how much inventory we have, how many closings we have had recently, and each week I'm going to be focusing in on a different product. The first week of the month will always be single family residence. The second week of the month will always be townhomes and villas, and I'm going to save the condos for last. Right now, the condo inventory is crazy. It is way higher than anybody has ever seen in a long time. Well, it's way higher than we have seen in a very long time. Palm Beach County itself, last time I checked, had 18 months worth of condo inventory, just record breaking. And all of the other markets and products are trending to a buyer's market as well. So as we dive into this, let's go ahead and take a look at bankrate.com, get an idea of where the interest rates are for now, and then we'll see how that is actually affecting the buying market and why sales are coming to almost a halt. All right, so let's get started. I'm going to dive into my computer right here, and let me see here. This is bankrate.com. It is a great resource for you to use. If you ever want to know what bank rates are doing, or you want a little bit of an update, you can come here and you can use this. They have different kinds of items for you to select from. So we're going to go ahead and go with home purchase. And we're not going to worry about all of this stuff over here. We're going to let it load first. Now, as you can see, we have a couple things. I'm going to click on this over here. So see how that rate is 5.624? Well, what's going on with that rate? Well, this is what you have to do. You have to buy it down, and it's going to cost you that much money, right? $12,657 to buy down the rate. And that's going to help you get to that 5.624%. So just want you to know and understand that because a lot of people don't know why they hear things about rates going, higher or lower. Some lenders have them at whatever, and it just depends. Honestly, you have to know what's going on with the rate in order to be able to understand what your payment's going to be. That's going to have the biggest effect for you. So if you look right here, a 30-year fixed mortgage rate is right around 7.07%, and that's today, Wednesday, January 8th of 2025. So if you look at that, you say, okay, well, 7% interest rate, that's pretty high. We're all hoping for the interest rates to come down, but you can't base whether or not you're going to buy a home on what the interest rate's going to do, what's happening with our government, whether our taxes are going to go up, whether the homeowner's insurance is going to go up or down. Your affordability index has to be based on how much home you can afford now, what your salary is, what your debt to income ratio is. You have to decide what product you're actually going to use. Are you going to go FHA with the minimal amount down as possible? Are you going to come in conventional? What level of conventional are you going to be coming in? 3%, 5%, 10% or more? If you don't want any kind of mortgage insurance, you have to have exceptional credit, and generally you have to put 20% down. But that falls off when you get 20% equity. If you only put 10% down, let's say you're buying a $500,000 house and you put 10% down, that means that your loan is going to be $450,000. Your 10% down is going to be 50 grand. Once you get to 10%, and you can ask them, let's say a year or two down the road, you have them come out and do an appraisal on the property, and it appraises for, $600,000, and now you have a lot of equity, then they'll remove your PMI, what's called PMI, right? Your mortgage insurance. So all of those things factor into your affordability index, and you have to be sure that you're looking at what you can afford now and today. If you're VA and you want to go VA, that's awesome. You can use that. And VA, you can have, zero down, and you can have zero closing costs. There are all kinds of different VA programs for you to use. But I've seen people come in with, 20, 30% down and still use their VA because they have entitlement available and they want to use that. If you don't know anything about VAs and you're not a veteran, then that doesn't apply to you. So as we were saying, this property, this up here, this 7.7% is generally what everybody is going to be paying unless you buy down the rates if you want something like this. And this is a 5 and 6 arm, and so are these other products down here, 5 and 6 arm. That gets really technical. I'm not going to try to explain what an ARM, which is an adjustable rate mortgage, that's what it stands for. I'm not going to try to explain that. That is not my wheelhouse. That is the wheelhouse of my lender. That's why I have really great lenders with me that I partner with. And if you look down here on bankrate.com, you can also get some really good articles that they start giving you more information of what's happening. Here's the trend. It was all the way down here in September. I did have clients that actually got an approval letter at 5.5% in September. Unfortunately, they weren't able to secure the home, and so that rate went away, and then all of a sudden the next week, boom, it was back up to 6. It just went right up. So you look at that and you say, okay, well, we were at 5.5, we were at 5.75, and then a week later, like bam, here it came, it was 6%. So you really have to make sure that you are locked in with your lender and they know as soon as you secure a contract, you're ready to go. You have that contract in place. They lock in your rate if it's lower. And a lot of people are using this expression, well, you date the rate. You marry the house and you date the rate. All right, well, what if you date that rate and it doesn't go down? You have to be prepared for that. Whatever your payment is, if you have a $3,500, $4,500, $5,500 payment, doesn't matter. Whatever that payment is, don't buy a home knowing that you're going to refinance when interest rates go down. That's setting yourself up for failure. Don't do that. Please, whatever you do, if you're going to buy a house, don't buy it with the speculation that things are going to go down, things are going to get better, the economy is going to improve. Whatever it is that you're imagining is going to happen, don't do that. You're going to set yourself up for failure. Nobody has a crystal ball. Mine broke a long time ago, but nobody has a functioning crystal ball. We can't tell you what's going to happen with the rates. We can only speculate and look at what has happened in the past. Right now, we were in a market that was a lopsided seller's market, right? 2019 came into 2020, pandemic hit. In 2020, everything started going up and home sales started going up. 2021 was an explosion. We had super low interest rates. People locked in 2 1/8. We had 2.75 locked in. I mean, everybody had amazing rates. 2022, they made the change. And then in May and June of 2022, the interest rates started going up and they just continue to go up ever since then. So now in the past 3 years, that has really leveled off. We were in such a great seller's market. Then we hit our peak. Now we're back out. If you think of it like a bell curve, we were here all the way up until 2022, and now we have started the downside. Here's the thing. If you're thinking about selling your home, that's going to be a factor. Affordability for the buyer is going to be a factor. Longer days on market, there are more homes that are sitting on the market for longer. You have to take all of that into account, all right? So moving right ahead, let's go ahead and take a quick peek at this, all right? So Wednesday, January 8th, current average interest rate for the 30-year fixed mortgage is 7.02. It's up 1 basis point from a week ago for homeowners looking to finance. Current average 30-year refinance rate is 7.05 for a refinance rate. So take that into account when you're looking at it, all right? This is great because when you click on these and you look at this survey here, or you look at the benchmark, you look at, how it cuts the benchmark interest rate, how the Federal Reserve handles these types of things, then, it's a good idea to become familiarized. You don't have to become a mortgage expert, but become familiarized with how things are working in the mortgage industry. All right, bankrate.com, great resource. It's awesome. So let's go ahead and let's move on. This is my Flex MLS. I've already done a little bit of a search, and we're going to go ahead and look at what is on the market. Now, this is Palm Beach County specifically. This is single family residences only. Remember, this is week 1. Single family residences only, and we have 5,061 properties for sale. I'm going to click back over to the other screen because I want to show you my hot sheet. All right, right here, it says hot sheet. All right, and that's everything that's happened in the last 24 hours. In the last 24 hours, we have had 1,451 homes come onto the market. New listings that came onto the market, all right? We have had 128 sellers say, you know what? I'm out. I'm going to cancel. I can't sell it for what I want to, plans changed, whatever. We closed 323 properties just in the last 24 hours, right? So if you look at that, you look at that ratio and you say, okay, well, there are 1,451 that came onto the market and 323 that came off of the market. You can look at it and say, okay, well, it's still a seller's market because there's less than 6 months worth of inventory. So it's a little deceiving when you look at it like that, all right? Because actually, there's 323 homes for sale, but there's a total of 5,000, right? So when you do the math, you start calculating how many months worth of inventory you have. We have a buyer's market in the single family residences. Look at how many expired. These properties have been on the market for 90, 180, 365 days, depending on how long they listed with their listing agent. And now they have expired, which means they're getting hammered by phone calls from agents like myself that call the expireds every single morning and just see what the reasons were that it didn't sell. Maybe they had a poor agent that didn't use professional photography or any digital products to get it sold. Their marketing and their advertising campaign wasn't strong enough to sell it. Maybe they priced it wrong. Some sellers are still living in 2021 and early 2022 where they think it's worth $50, $75, or $100,000 more than it really is. When you have more properties going under contract than you do expiring, that's always a good thing. Active under contract, all right, so you have 244 that went pending. We have 104 that just initially took their contract and accepted a contract. Now they're starting their process. So the general process is it's active. You negotiate terms, you accept a contract, it goes active under contract, which means they're starting their inspections, and then they have their appraisal, and then they have their loan contingency. So there are 3 real areas that a buyer can walk out of the contract and keep their earnest money deposit, right? And then you had 77 that withdrew. They actually came off of the market for one reason or another. Then you have 95 that are temporarily off the market, which could mean a bunch of things, such as they had something go wrong. They found mold. They have to fix or do some repairs. Or in the first inspection, they found out they have a leaky roof and now they have to do repairs or replacement of the roof. Whatever it is, they have temporarily taken it off the market, and it will be coming back generally with the same agent that had it listed in the first place. Extensions of 66. So it didn't sell and they're ready to extend. They're going to give their agent another 30 days or another 60 days or another however many days that they want to give their agent in order to get it sold. 80 properties came back onto the market, meaning they came off the market for one reason or another. They either canceled or they withdrew or they had to come temporarily off the market, and now they are back onto the market. We have had 842 price changes, which means we started way too high. We shouldn't have started that high, whatever. The agent wasn't a strong enough agent to encourage them, hey, this is the listing price. This is where you need to be in order to be ahead of your neighbors and ahead of the market. So we had 842 price changes because of those reasons. New and coming soon listings, 62. That's great. That's a good sign. You have 62 more people that have decided to sell, whether they have to or they want to. They've thrown their hat in the ring, and we've got 62. And then in text change, we have 917, means they had to do an update. Maybe the seller is a little bit more motivated than they were. They made adjustments to whatever and that. So remember, I want you to keep this in mind. All of this data incorporates all products. So you have, single family residences, condos, and you have townhomes, you have villas, you have housing for older persons, which is 55 plus communities. You also have equity memberships. You have everything included in this in our local board. All right, so don't forget about all of that. All right, now let's go back over here. All right, 5,061 homes that are currently for sale. This is Palm Beach County specifically, and let's take a look at how many are active under contract. So we have 658 that are active under contract, meaning they just took an acceptable contract and they are happy with the terms and the conditions, and they are starting their inspection process. And then from there, they will get their inspections done. They will get their appraisals done. They'll make sure they have their loan approved through underwriting, and all that stuff will be a factor. So once they've gotten past this inspection period, then it goes to what we call pending. And currently we have 518 homes that are pending. Now, what I always say, you accept a contract and it's still up in the air whether or not that contract is going to close. Once you get past your inspection period and you negotiate whether there are repairs that need to be done or not, then that takes it to the next step. Then you go to pending, because now it's just pending the appraisal and the loan contingency. Once the loan contingency expires, everything's good, we're ready to fund, appraisal comes back, we're good on value or we're not good on value and we need to renegotiate, or hey, sorry, we're not lowering our price. Just depends on the situation. It goes to pending, and then after pending, it goes to close. Now, take a look at that. That seems like it's a small number, but remember, this is single family residences only. We've had 100 close in the last week. There are going to be more that happen as we move on. The expired that are single family residences only are 3,341. That is in the last year, but let's go ahead and let's go days back and let's just say, all right, in the last 7 days, how many have expired? 76 homes have expired in the last 7 days just here in Palm Beach County. All right, let's check the 8-day mark. 326. So that includes New Year's Day, New Year's Eve, and New Year's Day. So all properties that, came rolling over from last year. It's a significant difference, 326 properties. Okay, so there you have it. Those are the numbers for now. That is the trend that we are in, the real estate news drop. Whether you're a buyer or a seller or a renter right now, you have to analyze your situation. You have to be in close communication with your lender. Make sure that you are able to afford the home. Make sure that they're analyzing your DTI correctly. And remember, when you buy your house, when that property gets reassessed the next year, your taxes are going to go up. So you have to plan for that. All right. Okay. So this is Vinny. Once again, sign off. Listen, if you want to get a hold of me, do me a favor, call me at this number right here, 561-320-4433. It's my direct line. I answer it every time. If you have any questions about it, just drop them in the comments below. Thank you so much for stopping by. Give me a like, give me a share, and consider subscribing while you're here. All right, we'll see you again. This is Living in South Florida. Once again, I'm Vinny, your South Florida realtor. I look forward to helping you start living your Florida dream. We'll see you again.